Okay, this is an examination of a mock IAS exam paper for the field accounting technicians. So first off, we're going to look at quickpay. So quickpay here is open in front of us, and we're going to turn around and go through regarding that's it. So as I said, let's have a look at this. So step one that you have always in the exam is you must upload of the data set from where is saved. In this case, our accounting technicians normally supply it on a disk. It could be saved onto your desktop, or it could be supplied to a memory stick. Right? So first step first, you need to open up your quickpay program and make sure that it is open in company A. Now restore, browse, okay, and locate the file. And so in this case situation, I have a on CD. It may be, as I said, on your desktop, Republic of Ireland, quickpay, and payback CTL. Now ensure either of these options will work for you: payback, payroll pay data only, or full data restore. But just remember, the data set will upload to company A. So you okay, you see payroll company A, Music Rocks, which is named the company, period 10, which means that all the accounts up to October has been done, or wages up to October, and some monthly payroll. So click OK. Now you can, if you want to, change the name now, because it's not required. So hit save name, and guess what's that? So your first part of your question done. Okay, company A, Accounting Technicians Ireland, monthly, period 10, the date regarding the end of October, and the timesheets are calculated. Okay. Next part of your question is around dealing with the whole issue regarding setting up yourself as an employee. It is important to remember at this stage that you must turn around and actually set the period. Okay, print all the details, there's no need for it. So it's month 11, the next month, ensure every week it automatically reads it forth, and remember the turn to set the date for it. And suggestion with this is ensure regarding it is the last date of the month that you're doing. So in here we're doing November, so set it for the 30th of November. Okay, and save. Now you have a situation where you need to progress onwards. Okay, and now you need to actually process it. So next step, update employees with the details that's turned on. So let's have a look regarding in the first one we're turned on. Okay, so in this situation we're turned to set ourselves up as a new employee, identified by your student number, your RR 11 or whatever your number is. Insert your student registration number, the surname field, important surname, leave forename blank. Commence employment on Wednesday 24th November 2012. You paid a rate of $10.45 per hour. So you are being paid on a wages basis, not on a salary. Overtime you paid the time in the third, you paid 37.5 hours who worked in November, received 1 week's PRSI, and overtime in 2.5 hours. A copy of P45 from previous employer is attached. So reference. Okay, so turn around looking at that regarding you had to be familiar with reading P45, because the details that you're going to be seeking in order to turn around and do it are going to be included in this. So name, student, your numbers, your details on regarding, and what you have to do is to actually input all these. So update employees, set up new employees, and straight off RX11 XXXXXXX. Okay, and you turn around told that this should be not in your forename but actually in your surname. Insert your address as per your CV. So, sorry, your to P45. You're told it's 12 Roseland Place, Killiney, County Dublin. So, 12 Roseland, County Dublin. Telephone number you don't have, PPS number you use, so back in it was 55053366R here. So 55036. Sorry, guess 5505336R 05336R. Okay, your date of birth. Okay, back to your total is 19th to the 6th, 1978. And this is important for fear you have pensions. 19. Or 6. 1978. 1978. Okay, you're not a director. Your start date is turn on your total to get your document. You start on the 24th November 2012. Or because you click the arrow and you turn and do it. Your start period 11. It's the same as you do. Okay, next your tax status. Setting up as an employee, it's always week 1, month 1. Okay, the reason being regarding you haven't received your tax status, so it's the same basis now. Okay, you turn around and continue forward, and you see your tax credits per month is 275 and 2,733.34 is your cutoff. Okay, so because of your credits, therefore 275 multiplied by 12 equals 3,300. And your cutoff of 2733.34, 2733.34 multiplied by 12 equals 32,800. No margin relief in here, as you're an ordinary employee, your credit base AO. Important to put in your gross now, and your gross and tax previous must be your figure from total pay, not regarding because this is employment. So it's 15,000, tax deduction is 250. Okay, next your pay details. Okay, and as you turn around, in case those that have no bank details given, put it in check. Okay, your basic hourly rate, your total here 10.45. Now this is only available if you are turned around and told that you will be getting paid no wages. Right? If you're paid salary, this would remain back. Going back to our question that we're turning around to do it, you're turned around told because of 37.5 hours work in November. Right? Okay. So turn around to because we can take that as being our normal working week, because it could be 37, it could be 39. Turn to it. Contract is hourly, because next CSO you are not interested in the cassette at all. Okay. Next. Okay. And because it just hit finished. Okay. So the employee is now set up. Now, should you get details with regard to USC, you would overwrite the USC details in case they fill that in. Right? Okay, you're only possible for you to get regarding case of your USC details if you turn around case I have it in a situation that the company is informing you that they have the company is informing you that they have a situation that they have received a P2 from the revenue. Okay, so that's done. This employee is now we're ready to enter. So okay, so let's get this employee done and get them out of the way. Okay, time and pay, open done, and it's the last employee so you have your 37.5 hour weeks, but you turn on notice regarding your time and a half double time. Right, but that's no good because I'm turning around told in this question that my overtime is paid at time and third, so I must change that to a comfort. Okay, so let's progress on. Back in, close out of this, company payroll setup, payments and deductions, and now I'm going to add a new line here, edit, and that's time plus 1/3. Okay, now this is basic pay. Apply tax, PSI, apply USC. Generally, overtime whatever it's all, because it is not pensionable. It may be pensionable, it may not be, because it's term, because it's debatable, because normally salary is payable. Some businesses its pension is not payable, so you can pick what you want regarding, because in this case I'll just do yes, not. Now, important, the premium must be 1 plus something, 1.33. Okay, so if it was a time and a half, it would be 1.5. If it was time and 3/4, 1.75, and so on. CSO, same story, not concerned needed. So okay, close that. So let's go back now and actually get this employee finished off. So turn 37.5 hours test. You turn around and told in your question that you're to get paid 2.5 hours overtime. You only get 1 week's PSI, and that's it. So let's press, because I put in, so 2.5, that's around, and see 13.89, which is 10.44 multiplied by 1.3, the premium rate. Salaries, no details, however, down here, your insurable weeks, it's week 1. Okay, so it's 1 week PSI, it's done. Okay, and you have all your details there. Now, save. And now for direct you have everything now completed and discuss issues. Okay, we can move on to our next employee. So, okay, employee number 2, we're on to is employee Lisa Carroll, who's going to get a car costing 24,000, which is a regional market value of 29. She's agreed to contribute 1,200 per annum towards the running cost of the car, and she travels 28 miles per annum. Okay. Now straight off here, your turn around and you're looking at regarding, because I need the formula for benefit in kind. Okay, so first off, X divided by 12, which gives you regarding the number of months, times the original market value of the car. Okay, multiplied by Y%, where Y% is actually one of these percentages based on the number of miles of travel. So in this case, as 28 business miles, and it's business only, it falls in this rate. Okay, so 24% be the rate we're going to use, minus, okay, expenses paid to boss. Now watch it, turn out the expenses in the agreed amount. What's that? Normally it is done that is the expenses turned out. So let's bring up our calculator and have a look at this. Okay, so straight off, the car costs 24, but its original market value is 29. 29 is what we're interested in. So 29,000. We have done 28,000 business kilometers, which lies in this rate, multiplied by 0.24, give you 6,960. Okay. Now we have agreed regarding to contribute regarding 1,200 euros per annum, minus 1,200. Okay, that's 5,760. Now that would be my benefit for 12 months, but I haven't it for 12 months. I've actually only received this in November. I only have 1 month got now and another month so divide that by 12 and you find it's 480 points. So my benefit in kind for this car is 480. Now same thing again, let's bring up Lisa Collins for a second and see there's no part here for benefit in kind. I need to change this. So close, company payroll settings, payment deductions, and under allowances, right? Okay, edit, right? Okay, car, BIK. It's a benefit in kind. It's car. Now we're not paying this net. In other words, the employer is not paying the tax, and that the employee is going to be done. Type not done, hours multiplied with units, so apply tax, apply USC, and normally benefit in kind is not pensionable. Click OK. Okay, so it's a gross BIK for car. Click OK. Now let's fill this up because that's it. So bring Lisa Collins up again. and she turned her salary, which is pulled because of her employee details. We had 480 in for because of benefit in kind, and there because what we were thinking because it's completed her normal 4 weeks now. So okay, so save. That's everything we have been asked us in that one. Done and finished. Okay, let's have a look at our next employee that we're talking about. Okay, and this is Jennifer Walsh. In November 2012, Jennifer Walsh signed up for a Dublin bus annual travel pass, cost $980 per annum. The bus pass will be paid for by, in regardless, whatever name the company, in this case the company we have is the data set Music Rock, and will be accounted for as an advance, so it should be Jennifer. Okay, just so because it's trying to do it. Okay, Music Rock will come first in advance to Jennifer, so it's normal course standard advance because of travel costs. The repayment of Jennifer is to be paid deducted via payroll over a period of 12 months as a gross deduction. Jennifer is also to be reimbursed for voucher travel expenses incurred in November of 95. Okay, so let's look at setting up. Okay, so what's it? Layout first before we look at the figures. There's a travel pass going to be paid for. Okay, she's to get her normal pay. There is a deduction regardless because the payments to be made, and she's also to get voucher expenses. So if we look at Jennifer's position inside in quickpay, we find out that we have none of these things set up here, so we need to turn around and actually put it through. Okay, so clear payment deductions. Okay, so first things first, she's going to get an allowance turner, she's going to get a payment beforehand. So edit, right? Okay, so bus pass. Okay, now this is a benefit in kind. Okay, order. Why? We're paying an expense for it. We do not, she's not going to get this money, right? Okay, apply taxes, apply USC, not pensionable. Now bus passes, yes, are tax free if the employer actually bought it. The employer is not buying it here, the employee is buying it and in turn. So this is actually bad tax planning, to be honest with you, right? But it's not our concern. We turn and do it. Bus pass, paid benefit in kind, gets turned. Now we're going to do it this way, right? Because straight off when we turn around, so we'll be looking in Sage line 50, we see regarding how the payment is going to be done. So click OK. Right? So that's the bus pass in here. Next step we're going to have is that's been paid, but she's going to have to pay the company back. Next step we're going to have to edit in regarding here. So let's call it bus repay. Okay, now this, okay, is going to be done gross. Why? This is an advance of wages. This is we're paying off. So this will suffer tax. This therefore she will be entitled to get it back. Okay. So hit yes. No, N comes up for AVC. AVC, additional voluntary contribution allowance for pensions, and Y turnover is done. Now, if it was a case that what you were taking a deduction of was not taxable, so it was a savings scheme or something like that, you would leave this as net. Okay, you only have three options here: net, gross, foresight, net, gross, pensions, and PHI. PHI, permanent health insurance. Okay. So we've put in our bus pass, we've put in our bus repay. We have one more thing to turn and do because that's at the expenses now. So I'm going to go to VOU expenses. Now it's a standard payment, yes, no CSO because of details, but here as it is vouched, no tax, no USC, as not pensionables, nothing got to do with holidays. So click OK. So we now have all our details in there. We can click OK and bring up Jennifer and actually start inputting. Salary is automatically carried over, and let's have a look what's going on. Okay, so the travel pass is going to cost $980 per annum. That's the whole lot regarding because it's done. right? Okay, so she bought it for the year. So the travel bus pass, €980. Okay. Now this bus pass, return on and told, is going to be repaid over 12 months. So it's 81.67 per month back. 81.67. We're also informed, okay, that she's going to get expenses of €95. So voucher expenses 95. Okay. And no changes in taxes, no fiddling around with any of these details. But let's look at the pay slip for a second. Right? And we turn around we see our details on it regarding it's a salary, bus pass, term voucher expenses, all turn around there. Right? Okay. Now watch, there's a non-tax adjustment here. Right? Okay. This has got to do regarding of the bus pass being paid. Right, so straight off payment is not done. So voucher expenses are non-taxable, being added on. Let's see that. So if we get 980 minus 95, we get 885. Okay, so straight off done. Hit save again, and that's that employee finished. Now next one, you're always going to get a situation here that employees were done. So Patrick Daly here has been made redundant 31st November 2012, so the last day of the month. So he's going to get a month. He's been employed with the company since September 1st 2008, and he's been paid a tax-free statutory redundancy payment of 2 weeks pay for each year of service, plus one bonus week up to a maximum of 600 per week. Now that's the law. That's minimum entitlement for statutory redundancy. Okay, he's also received his 4 months salary and a bonus of 300. So we have a bonus to put in, and we have a statutory redundancy to put in. So let's bring up Patrick for a look for a quick second. Okay, Patrick Daly, and we see we have nothing here to put in regarding statutory. We have nothing here to put in regarding a bonus. Okay, so let's stick that in. So close for a second. Payroll, payment and deductions. And first allowance we're going to turn through because we're going to put in is statutory. Okay, so statutory RED, redundancy. You can call it what you want. It's a redundancy payment. Okay, so you apply your book to the tax. In this case, no tax, no USC, and not pensionable. And the reason being here, this is a statutory payment. If it was ex gratia in above regarding the limits are allowed as outlined the question, then that element of it would be taxable, and you would have to split it accordingly. The statutory, this way tax free. The ex gratia payment, you do a redundancy, whole lot now but everything would be taxable. Apply USC, and in all cases no pension. So okay, so we have a statutory redundancy put up. The other thing that he's going to get is he's going to get a bonus. Now bonus effectively would be the exact same thing as what's redundancy, right? The only difference being you would call it redundancy and you call it ex gratia up here. Okay, so bonus, standard payment in this case, apply tax, apply USC, not pensionable. Okay, so we have both our details in there. We can click OK. Now, before we open up again, let's have a look at this request. Now, we're told that Patrick has been there since September 1st, 2008. Okay. Now, if that date had not been supplied and you turned it, you can actually find it regarding inside the employee's details. So Patrick Daly, okay, details 2, and so you start at 1st 9th 2008. Okay, so we know it's done. So here's the situation. He commenced employment. Okay. He commenced employment, okay, in 2008. In September 2008. That means in September 2009 he had 1 year done. September 2010 he had 2 years done. Okay. September 2011 3 years. September 2012 4 years. Okay, 4 years. Because he started on his first year, so 1st of September, 4 years. So September itself would be case of month 1, October, case of would be month 2, November, month 3, and he is ending at the end of November. He's finishing. So in here we have 4 years, 3 months. Right, now it is important to look at start dates, end dates of the months, not because it counted out. So 4 days, 4 years, 3 months is guess, or 4.25 years. Okay. So back to our question: what we're turning around told? It's 2 weeks for every year of service plus 1 bonus week. Now that means 2 weeks for each year. So 2 weeks by 4.25 years. And then you add 1 bonus week up onto it, okay, up to a maximum of 600 euros per month. So we need to find out how much Patrick is on and whether it's plus or minus 600, whether it's greater or less than 600. So let's go time and pay and bring up guess of Patrick, guess of daily. And we're turning told his salary is this amount. So calculate again. 2333.33 multiply by 12 to get it a year, divide by 52. It was 538 euros and 46 cents he has per year. Okay? Oh, sorry, per week. That's his weekly gross pay. This is less than 600, so his case of redundancy is going to be calculated on this figure. If this figure had come out as more than 600, then it would only turn around to be calculated on the 600 figure. So 538.40 is his weekly, okay, multiply by 2 weeks, which he's getting for each year, multiply by 4.25, that's 4 years and 3 months, okay. So 4576.40 is, guess what's it, his statutory redundancy. So 4576.40, 4576.40. Okay, we're also told he's getting a bonus, okay, of 3,000 euros at 3,000. Now watch us, because the employees leaving regarding this, as so just like when we were setting up, it might not necessarily be the 4 weeks because it could get more, could get less depending on circumstances. Okay, so as he's being made redundant, he's leaving, and you turn around and need to get put it the last day of the month, whatever date he's finishing up is what goes in. Okay, so we have everything in there. Hit save. Okay, so there, guess what, we're finished. Guess what, guess what, Patrick in there. Okay, now this one, Ben Adams, is way excessive. There's way too much guess going on in here. Right, you need to turn around and you need to actually look at it, and you need to see what's going through, because what's done. So let's have a look. Ben Adams received an additional tax credit of 150 euros per annum in November 2012. That must be changed before you do any processes in regards to his wages. He's also opted to contribute 245 per month in the company pension scheme from 1st of November 2012. Okay, that's done. The company has agreed to contribute 80 euros per month in his behalf. It's also been agreed the company will pay for golf membership. Okay, then 80 euros per month in his behalf is pension. It's not going in cases to Ben, so we need to set that up as a benefit in kind. Okay, it has also been agreed the company will pay for golf memberships and Ben's case on behalf of 850 euros per annum. It's a different type of golf. Update the payroll package to calculate this case of pay for it. He's also getting a car allowance of 8,000 per month. Now I'm throwing everything and anything in here to actually let you see regarding to done. Okay, so let's deal with it step by step. I must update his tax credits for 150. When I process his wages, I'm going to have to give him a pension, a 245 deduction. The company is going to pay 80 euros as a pension on his behalf. That's done. It's also going to pay a benefit in kind for 850 euros per month. And he's also right. And you're going to update the payroll to calculate this over a period of 10 months. Right, okay, so straight off, guess what's that? My intention on here is that the benefit in kind must be collected, guess what's it, because in a 10-month period. Right, so it's going to be €85 per month. Okay, reason being, like, for 2 months of the year, guess what's it, the golf course might be closed, or for some reason like that regarding, guess what's that. So the 850 is not spread over 12 months. It's not, so it's not going to be 850 divided by 12. It's actually going to be 850 divided by 10. Okay, and he's got it because of now, so it's 10 months because of it's done. And it's going to receive a car allowance of £8,000. Now, car allowance, not his benefit in kind, guess yes. Okay, but it is because of money that is being given to him. It is not because of turn because of benefit in kind. It's not going to be treated as benefit in kind. It is not because of a car. There's no need because of original market value or anything else. Okay, so let's have a look. So first steps first, close it, right? Okay, update employees, right? And bring up, guess what's your employee, guess what's here, guess what's it, guess Ben Adams. Now, we're turning around and told that he gets his tax credits, guess are changing. So 3,300, now plus 150 is now 3,450. You could easily get the cut-offs, guess are changing to as well. So 3,450, okay? Now, if cut-offs have changed or any other details, you would just change the cards. Save. Okay. Now, important, that must be done before you process the wages. Okay. Next step. Reason being, for example, if we turn around and just get the, for argument's sake, bring up Ben Adams and just hit save and close, and now try and change the details, we find it is grayed out because we have a wages process. We can't do it. We have to then just go back into Ben Adams, delete it, exit, update employees, and now go in, and now we can consider a change. Okay, so we have the change already made. That's done. Next step, company payroll, payment and deductions, because I need to put details in here. Okay, so first step, turn on edit done. Okay, Carlo. Now, you would be tempted to put this in as a benefit in kind, as other, right? I would advise against that completely, because this case, the employee is actually getting the money. We're paying him the money. We're not giving it to the staff. So this is actually a standard payment. Okay. Type is apply tax, apply USC, not pensionable. So apply tax, apply USC, not pensionable. But important, it's a standard payment. Okay. So let's get the payment put in. We're also now going to look at this one, golf. Now this one is a benefit in kind, okay? Unless we are arguing because the employee is actually getting paid, but I would take it regardless because done. It's other, apply tax, apply USC, not pensionable. Hit OK. So we have our credits on, we have put in regarding the car allowance, and we have put in regarding his details. With one last thing to do regarding the company's contribution for pension. Okay, so next step here. Now it is not a deduction. It is not this. This is the employee's paying. If the employer is paying over here, so edit pension ER, capital E for the employer. Okay, benefit in kind. Click on regarding other, right? Okay, and straight off in this one says apply by tax, apply USC, turn on and click OK. It's all done. Okay, now we're ready to update our employees at this time. So bring up Ben Adams, this there, and turn on to so let's look at the car allowance, right? Now you turn around told how much is the figure in there. He's to receive an annual car allowance of $8,000 paid monthly, commencing the 1st of November 2011. Now sometimes in exam papers this can be turned around and given to you that there's a couple of months due, so be careful on it. So let's have a look at last year's exam paper actually. Give you an example. Okay, so in this situation, because we told that that Shane Doyle received an increase in his annual salary of 8% per annum effective from the 1st of September. Now the wages you're actually doing here, because it's November's, the salary increase took some time to finalise because the board of directors, right? Okay, and you're told to pay any backdated payments that are owed. So in this case, calculate what the age increase and turn it out. Similarly, with our example, this car allowances could have been backdated to September and we'd have paid 3 months or so. Okay? Right? In this case, I'm turning around told 1 month to do it. Let's actually change this. Okay, so the 1st of September is done. So now all of so back to my calculator or my calendar. I owe him for all the month of September, all the month of October, all the month of November. Or in simpler terms, he's $8,000 per year divided by 12 and so on, multiplied by 3 months. So it's €2,000 this gets out to pay. So the car allowance is $2,000. The golf, remember, very important, because it's going to be calculated over 10 months. Getting 10 months benefit gets out of it. Okay, golf 85. Okay, pension is 80 by the employer, and we turn around towards the employee himself is contributing €240 per month. Okay, so let's put that in. It's pensions, voluntary deductions, and start typing 245. Now your two options here are percentage of your pension pay or your fixed amount. So if you're told it's 8% or 10%, whatever, you click here and just leave your figure. If you're told it's a fixed amount and the amount of money, you click here and hit done. Okay, save. Now you turn on told 7, 8 and 9. You turn around and told regarding all your particular details that you have to print now. It is important what you do, that you turn around and deal that you ensure that all employees have been saved. So if you're actually looking at we've dealt with Lisa Collins, we've dealt with Patrick Daly, we've dealt with Ben Adams, we've dealt regarding with the employee. We have done nothing though with James Jordan and Jennifer Walsh. Okay, so all of these must be saved because they're processed too, and they're just taken exactly as what comes through. So save. Okay, so suggestion, just open every one of them and save it. 2, Lisa, who dealt with 3, Patrick Daly, who dealt with save, Ben Adams, who dealt with save, and finally yourself that set up as save. Okay, now exit. Now at this stage you turn around to the website and you have all your various reports to do. Right, okay. Now the first report that you're more than likely going to get, you may be asked to complete the P45 for the employee. Okay, preview. Okay, and now you're asked to include all employees who left prior to this current period. If you're asked to do this, you could do this, you're only going to be asked for the employee this one, so leave that blank. Continue, and there you have Patrick Daly and all these details. Now take all these details and turn around if you supply the P45, fill it out as required. Okay, so important to note. Normally you're given the P45, so they're not going to ask you it's possible to ask it, but it's highly unlikely they would ask you to actually fill it out because you would have actually a template given for you to turn around and set up. Okay, next step. So that it'll be a highly unlikely thing to be asked. Okay, now it is very important for you at this stage that the prior to opening quickpay that you have set regarding QPDF or the PDF generator as your default printer, because you've no way in quickpay of actually selecting printers, right? It just turns around and automatically goes, and you save it accordingly. Now we'll have a look at this when we're doing the individual reports. Okay, the 1 point form that you are normally asked to fill out or station done is the P30, right? So let's preview this, and no, you don't want quarterly totals to confuse it. Now in this situation there is 2 figures and 2 figures only that you're looking for. So the November payroll is done. The first figure, they go to the line. The first figure I'm interested in is this, my total PUA 4916.21. My second details I have here is my payroll size interest 2327.85, right? And both of those are going to go into my P35. So go to my exam paper and I'm supplied this. So PAYE figure is both PAYE and the USC. So into this section here, no pence or no cents is going to go into it. What I'm going to put in is 4916. Okay. You got my PRSI. It's going to be this figure here, 2327.85, or to round up 2328. And give me a total then of 7244. Okay, so fill that in, and that's it regarding So that's part 8 done regarding completed. Okay. Now the remainder of the reports you're going to ask regarding the print them, we go through regarding detail. Let's have a look at the first one. A pay slip for one employee or group of employees only. So close out of this. Okay, close. Now update employees for a second. We have a look. The employee that is turned on is employee number 6. So I only want employee number 6 for my pay slip. So reports for print employee range go from 6 to 6, and then guess what? Laser pay slips. Okay, and QPDF it comes up. Right, you make sure that it's the printer. Click OK. The screen for up. And what you try to do regarding is make sure you set so for your desktop, right click on it, new folder, your exam number RX11XXXXXX. Okay, open, save, and ensure it's saved as a PDF file. Similarly, if it goes to net report or whatever, it's all actually done. Now you can do a batch of them. So select a number of different reports together. Okay, a batch from, let's say, the PayPal register and the P45 details all, and you can run them. I would advise against it. I would do each report separately, step by step. Okay, so in this case regarding so controls, let's say gross to net is required, print report. Okay, PDF done, save. Okay. Now, last thing is going to turn on is not so much for your deed, is to make a backup. So backup, payroll data only, browse, find your folder that you have done, normally on your desktop. Okay. Hit OK. Okay. That's completed successfully. And how you done round? Check in it though, as well. Go to your desktop, find your folder, and ensure that you have the 3 files. Okay. Lastly, no matter, this has nothing got to do with Sage QuickPay. It's got to do with Sage line 50. It's that you are going to have to look at the control summary. So preview, and in order to do your journal, you have to look at a particular area okay, of the report, and as it's this area here, and you need to create your journal from this particular area, and we'll look at that when we turn around you look at the video for Sage line 50.